Welcome to today's market report.
Stock indices around the world jumped on Tuesday as US technology shares extended recent gains and earnings reports were upbeat, while the 10-year yields rose to its highest in more than 4 months. The US dollar was lower on the day as our currencies, including sterling, were supported by investor expectations that interest rates could be increased sooner than some had forecast. On Wall Street, the technology sector boosted the S&P 500 the most, while recent stronger than expected results have bumped up the forecast for S&P 500 earnings for the third quarter. Investors remain worried, however, about the impact that higher costs, supply disruptions, and labor shortages are having on companies. The key for the market to going up from here will not be higher multiples, it will be the higher earnings. That's why it's so important to pay attention to what those profit margins do going forward and what the trajectory of GDP looks like, according to Hodges Funds. Among U.S. companies reporting results on Tuesday, insurer Travelers Cost Inc. beat estimates for third quarter profit and its shares rose. Johnson & Johnson raised its 2021 adjusted profit forecast and its shares jumped 2.3%. The Dow Jones rose 0.56% and the S&P gained 0.74%. The Nasdaq added 0.71%. The Pan-European Stock 600 index rose 0.33% and MSCI's gauge of stocks across the globe gained 0.73%. The MSCI index reached its highest in about a month. The dollar index against a basket of other currencies was down 0.22% on the day at 93.73 after earlier dropping to 93.5, the lowest since 28th of September. Bitcoin last rose 3.49% to $64,201.08. The US Treasury market, the yield curve widened, reversing the recent trend. In afternoon US trading, US 10-year yields were last up nearly 6 basis points at 1.6407%. The yield hit a 4.5-month peak of 1.6440%. The US 5-year yield, which has been on a tear in the last 2 weeks, was last down 1.1586%. Oil prices climbed and were near multi-year highs as an energy supply crunch continued across the globe. Brent crude rose 75 cents to settle at $85.08 per barrel. US WTI futures rose 52 cents to settle at $82.96 per barrel. Gold futures gained 0.15% to $1,769.70 per ounce. GBP/USD seesaws around 138 as traders brace for the key inflation data during Wednesday's Asian session. The cable pair shared hopes of the Bank of England rate hike as well as broad US dollar weakness to refresh the multi-day high the previous day. However, challenges surrounding the UK's COVID conditions and Brexit woes probed the bulls. Bloomberg quotes BOE Governor Andrew Bailey's latest comments to highlight the rate hike chatters. Speaking to an online panel organised by the Group of 30, Bailey said that while central banks don't have the tools to counter supply disruptions, and he still believes the recent acceleration of inflation will be temporary, officials need to seek to prevent high inflation expectations from becoming entrenched. On a different page, the US dollar eased after the downbeat housing data cooled down temporary tantrums. US housing starts registered a sharp fall in September, minus 1.6% month-on-month versus 1.2% prior, whilst the building permits registered the largest contraction since February, down 7.7% compared to 5.6% previous readouts. That being said, the dollar index dropped to the 93 figure. It's worth noting that the risk-on mood helped the Wall Street benchmarks to poke record tops, whereas the 10-year yields gained 5.7 basis points to raise the highest levels since late May by the end of Tuesday's North American session. The UK recorded the highest coronavirus-led daily death numbers since March the 9th, the previous day. The weekly rate of new reported cases of COVID-19 in the UK is one of the highest in the world, having jumped from 367 cases per 100,000 people at the start of October to its current level of 463 per 100,000 people. The euro-dollar climbed 0.22% at 1.1636. The market sentiment remains upbeat and the currency extended its 5-day rally. The next target for the pair is at 117.50.
This is today's market news. Thanks for listening. We'll see you next time.